My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Beautiful friends, I'm just trying to make you a little money. Hey, my job. Entertain, but also explain, because this is a very complicated day. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. The absurdity of earnings season has arrived. It didn't take long, did it? People are already doing stupid things. And you know what? I got to point them out to you so that you don't make the same mistakes. I am on a mission to make you a thoughtful investor, not a thoughtless trader. And I'm going to use this moment to teach you the difference. So on a day when the Dow lost 325 points, NASDAQ shed 0.76%, and the NASDAQ tumbled 1.01%, really ugly over there, we saw stocks trade all over the map as part of what I call the quarterly repricing process that is earnings season. Now, you need to know that the vast majority of the time, most stocks just trade with the stock basket that we call the S&P 500. If there's no big event that changes things, then nothing really happens other than the associated moves extrapolated from external forces that are often tangentially related to a company's future and, yes, the basket of the S&P. What's an associated move? Today, energy prices collapsed after it was reported that Israel is not planning to attack Iran's oil facilities, which are pumping oil out, producing about 4 million barrels a day, most of it going to China. Hey, speaking of China, we already knew the market was sputtering after that bout of stimulus, but today we got some real bad news. LVMH, the incredibly good luxury good titan, taking Hennessy Cognac, Louis Vuitton clothes, Moet Champagne, Tiffany, Christian Dior, reported a 16% organic sales decline in Asia ex-Japan last quarter, and that was driven by weakness in China. That is just incredible. Clearly, the Chinese Communist Party stimulus hasn't kicked in yet. So with China demand weakening and no threat to Iran's fast oil apparatus, the price of oil just plummeted, closed down almost 4%, taking West Texas to $70 a barrel. It was a brutal round trip, too, as oil had roared in anticipation of Israel taking out Iran's oil facilities. With that concern possibly off the table, we got a stunning decline, not just in the crude, but in the oil stock complex. They, quite frankly, were obliterated. I found myself wondering if the oils are even investable at this point. It's no use trying to call the bottom of something that could go from 70 to 50, and 50 is where the Saudis say it could be headed, because OPEC has no production discipline anymore. Of course, anytime oil goes down, we typically get a knee-jerk repricing of all the retailers, restaurants, and travel and leisure stocks that should be winners in a world where consumers have more money in their pockets from lower gasoline prices. And that's exactly what happened. The cruise lines, for example, big users of oil, terrific travel place, just exploded into the stratosphere, leading the entire market. Carnival joints up more than 6%. Norwegian roars 4%. Royal Caribbean rallies almost 3%. Makes a ton of sense. But I think that instant revaluation could always wash away tomorrow. And I say that as anyone who likes the cruise stocks, and I do. By the way, I also like the restaurant stocks, but not so much that Texas Roadhouse should be up 3% or McDonald's up $3.50 to a new high. Too robust for me. But traders can't resist these often bogus revaluations. Hey, I hope they ring the register. When you extrapolate from one company's earnings to the rest of the industry and then to its customers, you rapidly get to the height of absurdity. ASML, a Dutch semiconductor capital equipment maker with a virtual monopoly on its part of the food chain, reported a heinous quarter today. This came out of nowhere. ASML wasn't even supposed to report today. It was a mistake. The panic from this one spread throughout the semiconductor world, bringing down everything related to microchips, including the ones that are dedicated to artificial intelligence, which is the one end market where ASML said things are smoking. But because ASML wasn't supposed to report, no one was ready. So the whole group was just a free fire zone. There was no effort to distinguish between AI-related chip makers and everybody else, which is why NVIDIA got clobbered, even though ASML talked about AI as the one bright spot. More on that later in the show. The real misinformation comes in the drug stocks. Now, I've done a lot of work on Johnson & Johnson coming today for my backgrounder, the company, before I go on air, for Squawk on the Street, try to really dig in to help you. I saw the numbers, and they look great. With the exception of the medtech portfolio, it turns out that things are even better than expected with the pharma portfolio, especially J&J's cancer drugs, which are truly revolutionary. They have an amazing treatment for bladder cancer. Something used to be just fatal. The medtech weakness was all due to some problems in Asia, and the excuse made total sense. Moreover, this Bravado franchise, that's their psychiatric ketamine drug that makes people feel like life is worth living if they don't. It's growing like mad. I've been praising J&J's endgame work with the plaintiffs' lawyers who are suing as part of these endless talc lawsuits. The company's created a subsidiary to handle this and filed a bankruptcy accepted by a Texas court. real bad venue for the plaintiffs. 83% of those who are suing want to settle. You get that overhang, probably be about $8 billion, and it'll be measured over multiple years, not just one big check. Well, let's just say you got a brand new J&J, and that could happen relatively soon. So this morning I'm on air, I'm looking at the stock of J&J and thinking, well, I don't know, 3, 2 up, but it's down. I mean, it's literally down $1. I mean, that was nuts. A price set by morons who haven't done their homework. I've gotten to the point in my life where I'm not going to accept the market's judgment when it's plain wrong. So I called out the stock prices being fixed by bozos, and yes, I even invoked the fabled Scrooge McDuck. All right, this was the moment to reevaluate J&J up, not down. Yet millions of dollars were being flushed down the drain at that moment. Now, fortunately, the useful idiots were defeated, and the stock finished up $2.50 or 1.5%. It's got room to run. Okay, how about my Goldman Sachs, my alma mater? I saw the earnings report, got my backgrounder, did all my work, had my models, found myself thinking, wow, this is some story. David Solomon, the CEO, is putting up fantastic returns. I think it should go up maybe 2-3 points. No, it opens up $16. I mean, who the heck paid that? What kind of bozo the clown paid $16 higher? Who didn't even care what price they paid? What a chowderhead. I hope they aren't playing with your money. Of course, that overpay then triggers the opposite, an underpay. The stock proceeds to drop $25 in a totally chaotic moment. Then it bounced, only finished down a few cents. I wonder where this powerhouse would have traded if people buying and selling it knew how good it really was. That's shameful trading. Price discovery is a nasty game. I saw it happen last week when Wells Fargo reported a terrific quarter. Initially, saw its stock plummet $1.50. I wanted to throw something at the TV, but I used to do that. I actually threw a brick at the TV. I'm out of that game, okay? I got my backgrounder, quickly realized that it was a much better than expected quarter, the best of the bank so far. If you stick around, I'll be speaking to Charlie Scharf. First on CNBC, never been on, 5 years, Wells Fargo, stock's up 9% since then. Now, I want to make one thing clear. I'm not saying that everybody's a moron. I'm saying there are details that informed people are looking for, benchmarks we've accepted going into earnings. Yet for the first few moments of trading, there's just obviously oblivious action based on who knows what. It's definitely not the key metrics. It's definitely not the homework. Bottom line, this is just the sloppy way that Wall Street reconsiders the price of a stock when compared to its peers and some parsed headlines during earnings season. Thank heavens it only happens 4 times a year. It's a hugely vital time, though. The only time a stock is unmoored from the S&P. Yet if you're not a professional, you should not be involved in this process. There are so many people playing with so much money, professionals who pay people fortunes to figure this stuff out. Let them fight to set the price. For regular investors like you, trying to trade that initial post-earnings action is just an easy way to lose money 4 times a year, like clockwork. Let's go to Hutch in New Jersey. Hutch.
Hey, Jim, it's Hutch from Stockton, New Jersey. I was wondering what you thought about
Hutch, are you kidding me?
PayPal.
Stockton?
Stockton.
What are you?
Yep.
What, you in Sturgeonsville Inn? Where are you?
I've been Stockton Inn.
Oh, man, I love the Stockton Inn. There's a small hotel with a wishing well. Let's go to work. Actually, that song, Rodgers and Hart, is based on that hotel. How do we get? Let's do something.
PayPal. What are you thinking about PayPal?
Oh, my God. This guy, Alex Chris, he has just energized that place. Ever since I saw David Faber should not be jealous of my interview with Charlie Scharf, because I'm jealous of his interview with Alex Chris, if you want to play that game, because it was at the bottom. The stock's down $1 today, 79. It is by half now. The stock's on a parabolic move by half lower. Today's action is a classic example of Wall Street reconsidering the price of a stock during earnings season. For all the home gamers out there, I am urging you not to get involved in this process. On May tonight, Wells Fargo CEO Charlie Scharf is about to celebrate his 5th anniversary running the bank. Now, I'm sitting down with the executive from the company's New York City office. It is a rare and exclusive 2-part interview. You do not want to miss it for a very important stock. Then Swiss watchmaker Breitling is celebrating its 140th birthday. I got one of the first ones. Just kidding. So I'm checking in with the company's top brands to discuss the state of the luxury watch market, the NFL partnership, and what the future holds. Plus, as I just said, chip company ASML plummeted today on an earnings report, and I'm starting to realize that there are 2 very different semiconductor industries here. I'm going to share the details about the chip space that you need to know in order to continue to invest in these stocks. So stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.